Hey investors, Dennis here, and I am actually going to do something I haven't really done on this channel in a long time, is actually look at my Robinhood portfolio. Now, I mainly do videos about my M1 Finance portfolio because that's honestly the bread and butter of my investments, but I also do a little bit of play around with Robinhood, and I just recently did pretty large purchase here, so I kind of figured why not just share this with you guys. Obviously, if you've been following along for a little while and whatnot, to kind of get an idea of like investing some pretty large sums of money, at least in my eyes, large sums of money into certain stocks that I see some potential in. Now, the reason I also wanted to show the M1 Finance portfolio is that obviously you can see here I have a large sum in this account. This is a fairly large amount. I also have a retirement account as well too. So when you take that into consideration, my retirement I think is like 111,000 or 115. It's been up and down lately with all the market stuff. But when you consider that plus the this dividend portfolio, this $7,000 in this account is a very, very small portion of my overall portfolio. So keep that in mind when we go through this and talk about it, because I am honestly not really, as invested in this as I am in my other one. But I wanted to show you some of the companies I have, and then the three stocks that I just recently bought that I put over $1,000, about $1,000 into each. Which is like exciting, but also really nerve wracking because I've never really done something like that, especially when I can, take that money and invest it back in my M1 Finance. So we'll see how that kind of plays out in the long term. But before we actually get into going over the stocks and stuff like that here on Robinhood, I just moved this camera screen a little bit. I do want to actually quickly mention, if you have some student loans that you are paying with some pretty high interest, check out my friends at Earnest to be able to refinance your student loans, obviously before rates keep going up. It takes you about 2 minutes to check your rates. It's actually entirely free to refinance your student loans, like in case you didn't actually know. And that link down below will actually help support out the channel, but also gives you a nice bonus for using that link, which does help support out the channel to do more free content like this. So let's kind of go ahead and take a look here. So this portfolio has not been doing well. You can see here in the last week, it's down about 5.5%. And then the last month, it's down, not as bad, but still down pretty significantly. Just in general. And then I think 3 months, yeah, we're down 15%. So ouch for sure. So let's kind of go over some of the stuff here you can see on the right hand side. I'll just go over all the stocks and then I'll talk about the three, which are the ones down here. So we have LDI, which is Loan Depot. So I have about 500 shares in this. This is definitely the thing that has really hurt my portfolio in the long term, or over the long term here of like the 3 to 6 months. So I'm down pretty significantly, but I am going to be holding for the long term. I do have Virgin Galactic, which is SPCE. I have about 40 shares here. Actually, let me click on these as I go around. So right here, so Virgin Galactic, you can see right over here. I forgot where everything was for a second. So like my total returns, I'm actually down 37% on this, which is a little unfortunate, but I'm holding down for a while. I actually bought and sold this quite a bit. I mean, it's not a lot, obviously. Where is this at? So that was bye. So I sold back 10 shares at $29.30. I even sold at $32.60. So I was like selling as it was going up. You can even see here $48.99. So I was selling most of my shares, and then I held about 10 shares for a while, and then I just recently purchased a little bit more at $8.49 because I was like, if it just wasn't that much to the point where it was going to really hurt me if the stock keeps going down. But I do like the idea of like one day if it skyrockets up again, I'll go ahead and sell a little bit. And it's actually not been doing too shabby as far as the company hopefully gets things up and running officially to start sending people off on a consistent basis. Now, next one over here is actually Robinhood themselves. I thought it was kind of cool to just own some of the shares of a company that I'm using to actually buy shares of other companies. So you can see here, we have about 50 shares here, average price of $19.44. It's at 11.46 right now. So I'm actually down 41% even at that average price point, which I know depending on the person, some people, even if you bought it at IPO, which was $38, I did a little bit at that point. It went all the way to $70. I couldn't actually sell at that peak, which I would have because it was such a drastic increase. But I've just been dollar cost averaging a little bit here and there as that price has gone down. I probably will stick around $50 here and there. Not too big of a deal. And then we do have ARK as well. I actually do like ARK still. I know a lot of people give it a lot of hate and everything else that's going on. I just really like a lot of these companies in general, but I don't want to be invested in just one of them. I want to be invested in a lot of these companies. Like I actually had Twilio for a little bit. I actually had Zoom by itself. Block, I do still actually have by itself. I wanted to get into Roku, Coinbase, Spotify. So it just made sense to kind of diversify and be in these as a whole. Granted, the expense ratio is a little high, but we'll see how that plays out in the long term, because that's what I am. I'm a long-term investor for the most part. So we'll see how it plays out. So my average cost is $91.92. You can see it's at $60.30 as of this recording. I have 13 shares, so I'm down about 34%. So I'm actually not down as badly on this fund as I am with some of the other stocks that I have. And then the last one that I've already had prior to the three that I added recently is SoFi. I've actually been in and out of SoFi quite a bit. Well, not quite a bit, but just a little bit here and there. So if I go in here, you can't see all of it, but like I sold back in June of 2021. I bought, I sold. Right there, I sold, and then I bought again as well too. So I've been in and out of SoFi a little bit here, just because at some points it felt like the stock was up a little more than I was expecting it to be, and so I might as well cash in on some of that and then buy in at a lower price. So it's been working out there. I'm not some kind of day trader. I just kind of sometimes will move it here and there, where my M1 Finance portfolio, this thing right over here, I do not sell stuff. Like if I go, actually, where are my activities? Like all of these are just buys, because I don't sell at all on here. Like I rarely do. So you can see here my average is 802. So I'm actually pretty close to the break even point, which is being down 6.43%. I own 50 shares. So that's actually the highest I've had even in the prior purchases that I've been doing. But let's talk about these three companies that I just recently purchased, and you can see them right over here. So I got PayPal, Netflix, and Coinbase. Now, these are companies that I've seen before. They've been on my watch list for a long time, which I have. I have tons of stocks here on my watch list that I just kind of keep an eye on and pay attention to. I look at where they're at. I look at where they've been. I look at their PE ratios. I'm on Seeking Alpha a lot of times. So like I'll go to like Netflix. Obviously, they had that huge drop. I look at their earnings per share, their PE ratio. I look at how much is being shorted right now. Look at their annual growth. It's revenue, keeps going up. Earnings per share, they still, except for Q2 of 2021, has been doing, well, I guess even 2020 wasn't so great as far as missing out on the estimates, but they've still been doing pretty well long term. And so I was like, okay, well, let's go ahead and just put in $3,000 into these three stocks and then see how that plays out. Now, I just got into them, so obviously the market's going to still fluctuate a little bit. So I was able to get 10 shares of PayPal at 109.78. So it's down a little bit already. I'm already down 2.8%. So, I'm not worried about that necessarily, because I'm expecting it, for the next couple months to see where it goes. And if it keeps going down, I might even consider buying more. But as of this time, I think just buying in $1,000 will be kind of where I want to play it, especially because I did $1,000 in each of these, or close to $1,000, you could say, and kind of see which one almost performs the best, which one maybe underperforms, and kind of, do a follow-up video in the future about it if you guys actually like it. So you can see here with Netflix, I have 3 shares at $3.50 price point, and so it's down a couple bucks. So I'm down 1.29% on this one. Again, no worries when it comes to the short term, just kind of depending on how it plays out long term. And then with Coinbase, I ended up buying 6 shares with an average price of $155.47, and I'm down about 2.38%. This one is definitely a little bit more risky when it comes to the play. Obviously, you can see it's gone up, it's gone down, it's gone up. So you can see here, like the earnings per share is 4.47, PE ratio is 34.46. When you're looking at this, you can see a lot of potential and where it can go. They've been doing a pretty solid jobs with their earnings per share as well. And, hopefully with everything else kind of coming along, that we have an opportunity to be buying at this lower price point, and then, see that increase, and either sell if these go up, probably in a relatively short amount of time. If these go up, I would say 25% within like a week or something like that, I might consider selling. But if they take 3 months to go up 25%, I'd probably hold them a little longer than that, depending on how the market feels and like where everything is going. So like I said, I'll be kind of showcasing this from very time to time. So what you could do is make sure you hit that subscribe button down below so you can see the progress on these as well, on top of what we do with the long-term dividend investing portfolio as well. So you can see kind of both and maybe which one plays out a little bit better in the long term. Obviously smaller dollar amounts, but we can always, go based off of like percentages as well, because that'll kind of give us a better gauge of all of that. Don't forget to check out the link in the show notes down below. Hit that like button while you're down there as well too. And then I'm going to place another video right over here for you. I don't know why I made a bunch of lines, but I'll place another video right over here for you to keep on learning and watching. My name is Dennis, and I'll see you in that next video.